Hey, how goes it? Ken Bozak from the Crypt. Here to talk about Bitcoin and Bitcoin accessories. Today, we're going to be talking about investing in Bitcoin to secure your retirement. And today, we're going to be talking with Jack Tatar. He is from bitcoinandbeyond.com, co-author of one of the first books about Bitcoin, What's the Deal with Bitcoins, and co-author of one of the newest books about cryptocurrency, Crypto Assets, the Innovative Inventor's Guide to Bitcoin and Beyond. Jack, thank you so much for taking the time to come on my show tonight. Can you do me a favor and let people know like who you are, how you got into Bitcoin, and what you do now that you're in the industry?
Sure, I would be very happy. Well, first of all, I want you to know that I'm in the president of the Ken Bozak fan club. So that's first and foremost my most critical my most critical role here. But let's see. I'm kind of the old guy. Whenever you go to a Bitcoin conference, I'm kind of the old guy that you see there. But I've been actually involved in Bitcoin for a number of years. I actually wrote one of the first books that was out about Bitcoin in 2013 called What's the Deal with Bitcoins? And that actually grew out of some research work that I was doing. And I had a person who was working with me and I asked him to do a little research for me on Bitcoin and came back and with about 80-page report on it. And he and I, and that person's name is Ryan Lancelot, he and I put together the book, What's the Deal with Bitcoins? And we put it out there just kind of as an introduction to Bitcoin. And it was pretty soon after that that I fell down the rabbit hole with Bitcoin. And I've always been excited about new technologies. I was one of the first guys to play around with something called Second Life. Have you ever heard of Second Life, Ken?
No, what's that?
Second Life was like a virtual community. You had like an avatar, and you could live in. It's kind of like there's a new coin that just came out, Second Land, I think it is, or something along those lines. Which it's a virtual community. You had an avatar. You can go around. You could buy real estate, and you could build houses and businesses in Second Life. It was very, very cool, but it was very, very weird, and it just got really too weird. And then it kind of went away. But I've always kind of played around with new technologies. But I come at the Bitcoin really because of my interest in banking, economics, and the value that I see in the decentralized, distributed, and a lot of the libertarian views that are out there around the whole Bitcoin world. So wrote that book in 2013. Did a lot of writing on Market Watch. Because I had also written some books about retirement and finance and wrote some articles around investing in Bitcoin, which we may talk about here. And then just recently, I was fortunate enough to work with Chris Berniski on this book, Crypto Assets, the Innovative Investor's Guide to Bitcoin and Beyond, which is actually, it's been out on Amazon, but it actually goes into bookstores in a week. And this is the first podcast or broadcast I'm doing around the book, and I had to do it with my buddy Ken. So here I am.
I really appreciate that, man. It's exciting. This is a big reveal, guys. There's actually a link in the description box below this video for both of the books Jack has published. So if you're interested, please go ahead, check out the description box, click on the links, order yourself a book. What inspired the second book? You just got done telling us what, inspired your original book. What were some of the things that led up to this current one?
Well, the new book, which by the way I have here, just only because we're about the only people with it here. But the new book actually grew out of the work that I was doing on Market Watch. I was writing articles on Market Watch, and I was trying to figure out how to bring Bitcoin in as an investment into your retirement portfolio and into your regular investment portfolio. And I took a view of it from basics of asset allocation, modern portfolio theory, all of those types of things, to basically say that I felt that Bitcoin could be what's called an alternative investment. So you have stocks and you have bonds, and Bitcoin is an alternative investment similar to gold. So at the time, I decided that I'm going to go along and follow my way down the rabbit hole, and I made an investment in my retirement account and put money into it and followed that journey through Market Watch. and we had about 2 years worth of articles written about it. And I essentially bought into GBTC, which is kind of an ETF type of investment that invests in Bitcoin. And I invested in that. I wrote about the whole process. I even wrote articles when the whole investment went down 50%, and I was called a moron and an idiot in more ways than anyone else has ever been called. And then, of course, about a year later, I wrote about how great it's been, and I haven't really written since then. But because of that, I actually ran into Chris Berniski at a consensus conference about a year ago, and we were sitting down having lunch, and Chris knew of some people I knew, guys from Lawnmower. I think Ken, you remember the company Lawnmower,
yes,
and the guys who were out there. So I was one of the investors in Lawnmower. Chris knew about them. He knew about my writing. I knew about his writing, and we sat down and we said, we both think it would be interesting to do a book, not just about Bitcoin, but investing in Bitcoin, and at the time what we were calling blockchain assets. And so Chris and I decided, let's give it a shot. So we did. It's a lengthy process. Writing a book is no fun at all, believe me, especially when you have two people and one guy's 30 years older than the other guy. But I was, like I said, I was fortunate enough to be able to write it with Chris, and we pulled this book together. And it was initially going to be called Blockchain Assets, but then we decided that we started to see that the terminology blockchain was being hijacked and taken different places where we didn't feel it needed to be. And Chris kind of came around with a taxonomy around crypto assets. And I think the timing is right. And that's what we call the book, Crypto Assets. So the book is, like I say, just coming out. But in it, it's an exploration of what Bitcoin's all about, a little bit of the history of Bitcoin, altcoins, a little bit about the taxonomy, and then a significant amount about how to invest in it and how to do it in kind of your investment portfolio, and how to view it almost like how you would view stocks and bonds. And we believe it's the first time that that's ever been done in terms of taking a look at these investments. And what's interesting is this book had to be written back in March to be published now. So you can only imagine what a moving target that was between March and now to get edits in and everything else. So, but we've kind of kept it up to date and made a lot of changes and kept a lot of the theory evergreen in there. And we're very proud of what we've written.
I can't imagine the battle against relevance when it comes to writing and publishing information on anything crypto or blockchain. It just happens and moves so fast. That actually brings me to a couple questions here. Like, you brought up earlier that you invested in GBTC. Could you explain the difference between BTC and GBTC a little bit for the listeners? They may not know that there's a difference there.
Yeah, sure. Sorry about that. GBTC is actually the Bitcoin Investment Trust, and it was created by Grayscale and Barry Silbert, who you might know has been very much involved with the Digital Currency Group. But the Bitcoin Investment Trust was actually an investment that you could only get into it if you were an accredited investor, which meant that you had to have a certain amount of assets, you had to have a certain income, and all these types of things. And basically, we're buying into a trust that for every share of the trust, it was worth 1/10 the value of the price of Bitcoin. So I think when I originally got into it, it was $65 a share because Bitcoin at the time was trading at $650. So you would have, so the underlying assets were, the net asset value was 1/10 the value of Bitcoin. And for a year, it did not trade on the market. It was a trust. Then after a year, it trades on the over-the-counter exchange markets, kind of like NASDAQ there. So you can go and you can buy it, and the ticker symbol is GBTC. And if you take a look at it, I think today it's trading at maybe about $600-700 a share, which is above what the net asset value is. Because if Bitcoin's trading at $5,000, GBTC should be trading at $500. But because it's trading on the exchange, it can trade at a premium. So that premium shows that there's an amount of interest in getting something that has Bitcoin and putting it into your investment portfolio. So you're actually paying a lot more than it's worth just for the ability to get it into your portfolio. And you can actually buy that through Schwab, Fidelity, whatever, even through a broker, and put it into your portfolio. So we're starting to see people doing that, and it's right now the pretty much the only thing you can do without buying Bitcoin on its own, to put into an investment portfolio. And we're starting to see some more come up. You probably heard the Winklevosses were trying to come up with their ETF.
Mm-hmm.
So if they had done that, then we would have had something else. And I think we'll probably start to see some ETFs coming along. But right now, that's the only thing that is something you can buy in the exchanges.
Yeah, I think the last I heard was some kind of Ethereum Classic ETF was going to be proposed, but
Right,
it's
and
hard
that
to
was
keep up.
actually from Barry Silbert, who I guess for some reason must have a lot of it laying around, so he wants to bundle it up into a ETF type of thing. But I think they pulled the plug on that. I don't think they're trying to do an ETF on that any longer.
Speaking of investing in GBTC to get traditional, investing in Bitcoin, what kind of percentage would you recommend if somebody who was willing to take what I consider Bitcoin to be a high aggressive risk investment? What percentage of like an IRA would you roll over into Bitcoin if you were looking to diversify your retirement?
Well, I'll put on my financial advisor hat here because I was a financial advisor for 10 years, and it all depends on each person. So you're a younger guy out there. You probably are willing to take on more risk than somebody like me who's pretty close to retirement. So because you're willing to take that risk, you're willing to go with the ups and the downs and things of that nature. So you might be willing to have a portfolio that would be more geared towards growth. So for you, you might do equities, a little bit of bonds, if any bonds, probably, very little bit of bonds. And then Bitcoin should fit into what's called the alternative investment sleeve for a traditional investment. That being said, a person like you, for your overall investment, you might want to have 10 to 20% in something that's an alternative investment. I don't know if that would be Bitcoin or whatever, versus someone who is potentially at my age, who should have probably a smaller amount than that because of the volatility. But what's interesting about this is, and we talk about this in the book, is if you had just put 1% of your portfolio into Bitcoin, no matter what you had, if you had stocks, bonds, whatever, if you had put 1% of it, over the last year, besides the returns, that 1% could have grown to become 30% of your portfolio because of the gains that you get. So all of a sudden, now you have a portfolio that you had 1% in Bitcoin, and now it's up to 30%, which makes that a very risky portfolio. But it could be very lucrative as well, because we've known what's going on with Bitcoin. So that's why I'm saying some people might be willing to take the risk. You might be able to take the risk much more than somebody like me who's near retirement. But I do believe that for people who are putting some money away, young people, taking a look at Bitcoin and putting a good amount of money into Bitcoin for savings and potentially for retirement is a good thing to do. But percentage wise, I would say, 10 to 20 is probably prudent. Some people, I know my son is a big crypto investor himself. He probably is much above that himself. But as that grows, it's going to become bigger, which means that you always have to take a look at it, potentially rebalance it so that because if you take that hit and take that dive, all of a sudden you're going to see a substantial amount of money. You want to pull some of that out, take some profits, maybe put it to the sidelines, put it somewhere else. Like I said, it's up to each individual investor.
Yeah, since that's awesome advice, and personally, me, I'm probably 100% in. I think I sold
Of
all.
course.
Yeah, I think I sold all the stocks I had. I went to buy gold and silver back when I first got Bitcoin, when Bitcoin was 400. And I'm so happy I didn't put my money in gold. And yeah, I dived all in on crypto, so it was a good year for me.
Yeah, no, absolutely, absolutely. I mean, my son believes the stock market is gambling. So for him, it's why not play in the crypto market? But even when you're in the crypto market, there's still a need to allocate that. I mean, do you
Yes,
put everything into Bitcoin?
I was just gonna
Do
get
you
to that.
do you yeah? I mean, do you go in a certain amount into Bitcoin, a certain amount in Ethereum, a certain amount in Litecoin, and then other alts? So even within your own crypto investments, you should do some allocation and some rebalancing there as well. I mean, there are going to be times when you're going to say, you know, I'm going to put a lot in Bitcoin, and then all of a sudden we start hearing about the Bitcoin fork. Well, does that mean that you should go hedge and go put some money in Litecoin as a hedge there? Or you hear a lot of ICOs are coming out. So let's go and let's throw a bunch of money into Ethereum because Ethereum is going to be the way to get into ICOs. So you want to balance within your own portfolio there as well. And then you want to get involved in some ICOs. So you want to have a
Yes.
portion in some ICOs. But all of a sudden you've got to be very careful. Like it's happened to me where I have a portfolio and then all of a sudden I get a really good ICO or a really good investment, and all of a sudden my allocation in, let's say, a metal or a factum has gotten so big that it's now as much as what I have in Litecoin or Ethereum. Well, I've got to say, well, is that the way I want to go here? So you've always got to kind of reallocate and
Yes.
take a look at your own portfolio there as well.
Oh man, I did some of that risk allocation during the Bcash fork, and I didn't quite understand what a crypto dividend was then. You know, the airdrop, so to speak, that Bcash was. I took about 20% of my Bitcoin, moved it into Litecoin, and I got 20% less Bcash for doing that. So I was like, man, I totally messed up. And so I actually did, I'm doing the opposite. I did the opposite for the B Gold one that's coming up. And since you brought up forks, I think this might be a good time to talk about, forks and splits. When Bitcoin's halving, all these terms that people are used to in a different context in the traditional investor sense. When you say Bitcoin split or Bitcoin fork or Bitcoin's halving, people take that into totally different contexts. So maybe
Right.
you could explain a little bit what a fork is, as opposed to when Bitcoin halves. Because people think when Bitcoin halves, it's when the stock split and you wake up with double your Bitcoin, and it's kind of more or less what a fork is. So if you could take the floor.
Well, that's a very interesting point because a lot of times when you talk to a regular investor and they think about stock splits and they think about all of those types of things, the concepts are different here. As you know, the halving of Bitcoin is something that occurs, after a number of years, and we recently had one, I think, last year, where the amount of Bitcoin that is being mined was halved, and this is to protect the 21 million Bitcoin that are out there over the period of time. So the halving that's involved with Bitcoin, that's something that's built into the software, and that's for the ecosystem. That I'm not sure where that plays in terms of the value of Bitcoin or the impact on Bitcoin, because it does mean that there's fewer Bitcoins being created, but it doesn't really change the amount of Bitcoin out there. So a lot of times when you hear stock splits and things like that, sometimes people get excited. Oh, that means I get some more or whatever, and you're really getting the same amount. The halving is something that's built into the ecosystem, which most people who know Bitcoin are aware of that. Forking is a different thing, and we recently saw this initially with Ethereum, when Ethereum had to fork because of the DAO. The DAO was something that was created on the Ethereum platform, and it didn't go so well, and it got hacked. And Vitalik, who was the creator of Ethereum, decided that we're going to make sure that we're going to get those Ethereums back to everybody. So he went in and he had to make a change to the software and basically said, okay, every Ethereum now will be created up here on this new Ethereum. And you had a fork where it kind of jumped and it went over to the new Ethereum. And then you had the old Ethereum, the Ethereum Classic, people who stayed there. So everyone who now owned Ethereum also got Ethereum Classic, because you essentially had two versions of it running at one point when it had that break off. So for many people, and that just recently happened with Bitcoin, people were referring to that almost as a dividend.
Mm-hmm.
So when we went to Bitcoin Cash, like you said, I had Bitcoin, and all of a sudden I woke up one day and I had almost like a dividend of Bitcoin Cash in addition to what I had with Bitcoin. That seemed to work out for everybody because the value of Bitcoin kept going up, and we got cash. So those people who thought it was going to work out well, it did work out well. I'm not sure that it solved the problems, unfortunately, that Bitcoin has. And now we find ourselves in another situation where there's now another consideration of a fork. And this, I think, is something that the community has to deal with. The community has to start dealing with what's best for the community versus what's best for the people holding Bitcoin. Obviously, everyone was happy, and I think there's some thought here that when we did the fork, maybe there was a little more focus on how is this going to benefit everyone who has Bitcoin or the whales who have Bitcoin, and a little less around solving the problems that were in Bitcoin. And now we're finding that we may be onto another fork, and I'm just hoping that we get this one right. And I think we will. I mean, you have to remember with Bitcoin, this is a whole network of people, voluntary system out there. And this is something the world hasn't seen before, where people are coming together and trying to solve some issues from all over the world. So it's a very exciting time, but so I don't know if that answers your question,
No,
but that's a little bit of the split with forks and halves, and it's a very exciting time to be in.
It's an exciting time picking your brain, and I think this set me up for another question. This, again, a little bit for the beginners here, but one of the main questions, one of a few that I'm asked repeatedly, what gives Bitcoin value? We talked about how it works, but what gives it value? Why is Bitcoin over $5,000? How is it sustaining that price? How did it get there? How does Bitcoin have value? What backs Bitcoin?
Well, valuation of Bitcoin, valuation of any crypto asset is a very interesting thing, and we talk about it in the book, and we have probably one of the first times you've seen a valuation model come together with how you can evaluate any crypto asset, and it talks about utility, the community, the network value, the stored value, all of these types of things. But let's take a look at Bitcoin. So Bitcoin right now is what we call a cryptocurrency because it acts as a currency. You can go on to Overstock right now and buy anything for your house. I'm going to Las Vegas in 2 weeks for a conference. I did my entire travel arrangements on Expedia, and I paid for it in Bitcoin. So it's a means of currency. It's for transacting. So it has utility value. Now let's think about it. That utility value was not similar to what it was when it first came out. I mean, it's had to get more usage of Bitcoin from a utility standpoint. So now people are starting to see that I can use it as cash. I can use it for remittances. One of the big use cases for Bitcoin is for remittances. And remittances are basically, for instance, those people who come from another country, let's say Mexico, who come and work here and they want to send money back to their families. Back in Mexico. Right now they're using Western Union for that. And somebody goes into a Western Union down in Mexico, somebody goes into a Western Union here and sends back money. They want to send $100 back to their family. They do that. They put $100 in and their family gets $90 because Western Union keeps $10 of it. So Bitcoin, it's a lot different. You send $100, they're going to get probably around $99. So to solve for remittances, and the remittances are a multi-billion-dollar market throughout the world, Bitcoin can help solve that. So there's other use cases that are out there for this as well. So all of a sudden you start to see that there's a value in Bitcoin, and every crypto asset has what we call, and Chris has done a lot of work on this, has a utility value and a speculative value. And if you look at things when they first come out, think of yourself for these crypto assets that you see out there. The price goes up on them, okay? And the reason for that is not because of the utility value, The reason for that is because of their speculative value. So when Bitcoin came out, there was a thinking that, okay, the speculative value of it is going up because people had all these great ideas for what was going to happen with it and everything else. And the utility value was small. So all of a sudden it reaches a point and it doesn't start to live up to its promises and it starts to drop down. And this is what we're seeing with some crypto assets. Well, at some point in time, like what we've seen with Bitcoin, all of a sudden people start to see, wait a minute, Bitcoin can be used to buy things. Bitcoin can be used for remittances. So all of a sudden it has utility value. So the utility value starts going up and the speculative value of it goes up as well because people start to look out into the future. And what we have is we have something called a J curve, which is something that we've seen even in the internet days. When stocks came out in the internet days and they shot up and then they came down because they really didn't live up to their promise, but then they went up like an Amazon. So we're seeing that with things like Bitcoin and Ethereum and others. But to go back to your valuation, like I said, within Bitcoin and within these crypto assets, there's this utility value and the speculative value. And if something doesn't live up to the speculative value, we see it drop down. And if it doesn't have any utility, it will keep going down. And this is what I'm afraid is going to happen with many of these ICOs that are coming out. They shoot up and say, oh, an ICO, everybody's making money on an ICO. And then when it doesn't live up to the promise, it goes down. If there's nothing there, it's going to go to zero. But if there is a good concept there and a good business model, it can go back up and increase, as we're seeing with Bitcoin.
Thank you. Thank you very much.
That's today's class. Sorry about that, Ken. A lot of academics there.
No, I hope people are taking notes. I know I'm going to have to go back and rewatch this myself. I just wanted to make sure I got your insights on this. I just heard or read actually today that Russia has officially announced that they'll be launching their cryptocurrency, crypto ruble. Your thoughts on that? And
well, are we sure it's not fake news?
Yeah, that's what I'm thinking. I don't know. Who knows? Right, exactly.
Well, Russia's very interesting. I will say, and I've been involved in the space now for a while, and I've done a lot, and I've spoken all over the world. The Eastern Europeans and the Russians are very much behind this, and they see great potential in this. And I think Russia is one of those few places, as is China, where you can get kind of the state behind this and the state looking at this and people looking at this and focusing in on it and trying to find where the potential is for this. So I don't doubt Russia is going to come up with something here, but Russia is going to come up with something here that is going to benefit Russia and is going to benefit the state. And that's where I get a little concerned. I mean, our whole concept here is really to create something that I think benefits everyone throughout the world. So when I start to hear like China's shutting down exchanges and all of these other things, the reason they're doing that is not to stop Bitcoin, because I think they're trying to figure out how to benefit from Bitcoin, but they want to get their hands into controlling the exchanges. So all they're really doing is they want to nationalize their exchanges so they can start to control the flow of this. And that may be one of the fears that we see with Russia doing this. I mean, is the government going to come in and try and control these crypto assets and all of those types of things? So what may seem to be something beneficial in the short term, we've got to kind of be concerned about how much is the state getting involved with this to control it and maintain it. Versus letting it grow and letting it get to be what it needs to be in more of an unfettered nature. So that's what I'm a bit concerned about this, as I am with the United States, where they start using a sledgehammer to regulate this technology rather than trying to understand what this technology does and working with the people involved in this technology to let it grow and let it reach its full potential, rather than trying to come in and control it and protect the status quo and all of those types of things. So I think we're going to start to see more of that happening. One of the things that's interesting is in Estonia, I don't know if you're aware of Estonia is trying to go to a e-citizenship type of thing using crypto assets and the blockchain. so that you could actually be in any country and you can become an e-citizen of their country. So they're very proactive about it, but it's not about controlling it. It's about understanding how it can benefit their society.
So do you see governments potentially using cryptocurrency like Bitcoin as a currency, or do you see them creating their own more likely?
Well, they can do, they can do whatever they want to do there. I think what's interesting is, I think they'll try and put some controls on Bitcoin and exchanges to try and nationalize things, because I think they have. I think they feel that they have to, because they feel they have to control the monetary system that exists in their country. One of the most interesting currency experiments that I saw, and I think I was talking to you earlier about Iceland. Iceland is a place that I love. I've been there before. They have a coin there called Aurora coin. And I know the guys who have been working on this, but Aurora coin grew out of the crisis of 2008, the financial crisis, and which is one of the things that Chris and I in the book we explore the fact that we think Satoshi was really looking at the financial crisis as a reason to create Bitcoin. But in Iceland is the only country that went bankrupt. Well, maybe that went bankrupt after the financial crisis of 2008, and also put into prison the business leaders and the banking leaders in their country. So here in the United States, we just slapped them on the wrist and said, "Oh, bad guys," and then we listen to what they say today about Bitcoin, but meanwhile we forget about what they did years ago. But in Iceland, those guys are in jail. So what happened in Iceland is Iceland then created this thing called Aurora coin, which the thinking was it may be a national currency, a model for a national currency. And it was airdropped to every citizen in Iceland. So all 300,000 citizens in Iceland received Aurora coin. And one of the reasons was because of how Iceland keeps a database and a registry of all their citizens. So they were able to do that. So they did this. They're thinking, okay, we've got this new currency. The problem is in Iceland, these people got the currency and they were like, now what do I do with it? And it kind of fell flat. But yet the currency is out there and they're trying to revive it. So, I mean, that potentially could be an experiment. I know there's something out there called BitNation, which is trying to create almost a sovereign government around a coin, not Bitcoin or anything else but around their own coin. So they're trying to do something there. But to me, if Bitcoin can do the job, why not take a look at using Bitcoin? But I don't think Bitcoin will ever replace the currencies that are out there. I think it'll be a complementary currency to what countries are doing. Countries will still want to maintain their own sovereignty, their own cash, but they will look at Bitcoin as kind of a complementary store of value. And people talk about it as digital gold, which it may be as well, to operate in that type of environment.
I wanted to talk a little bit about the beyond part of your book, Bitcoin and beyond, bitcoinandbeyond.com. So beyond Bitcoin, some of these altcoins and projects, platforms, what are a couple that you think have some longevity in them enough to invest in, or some projects that you just think will be beneficial if they did work out? For example, like BAT, Basic Attention Token, or Steam It, like they have a platform-based token. Anything like that catch your eye? Because you're an author. I'm surprised you're not making, bucks on Steam It or something.
Well, yeah, Steam It is a very interesting concept, and I know Ned, and Ned's a great guy. Ned Scott, who runs Steam It, and he's done a great job with Steam It, and I've kept an eye on Steam It, and I think it's a great concept, and I do think that there's that's a use case there for rewarding journalists and rewarding writers. So I do like that concept. Some of them that I'm looking at right now, and I will admit that I am an investor in some of these, but some of the ones that I've been very interested in is there's a company called Factom. I don't know if you're aware of Factom. Mm-hmm. Factom is actually something that is less around a currency and more around harnessing the blockchain to do things like smart contracts, but also they're working on paperwork around mortgages, paperwork around insurance, and putting that stuff onto the blockchain. And I think that's a very exciting use case to transfer all of these this record keeping that we do right now and putting it onto the blockchain. And Factum has been around for a number of years. I think they've got a great team. So they're looking at doing that. So Factum's something that I'm looking at. The other one I think is a very interesting concept is the company Metal. Are you familiar with Metal at all?
I've heard of it
And
a lot actually recently.
yeah, and they've been there's been a lot of talk about it. Metal has been getting a lot of play. They've got some real good advisors. They got a good team there, and basically the concept grew out of being a way for banking unbanked industries like the cannabis industry, where basically if you go into a dispensary, you've got to pay with cash, you've got to store cash. It's a cash business.
It's dangerous.
So yes, so it's totally dangerous. A lot of record keeping, a lot of issues there. And come on, we're getting more and more states are doing this. So Metal went in there and said, we're going to try and figure out a way to allow people to use Metal, and for the dispensaries and the businesses to also receive pay in Metal. So there's a concept there, not just for the cannabis industry, but for other businesses as well. And I think they're doing some good things there. I know you mentioned Salt. Salt out there is something that's in the lending area, and I think that there's a major use case out there for lending, whether it's using the blockchain to match up assets for lending purposes, or using the blockchain to match borrowers and lenders for people. So I could be going into a system and I could be lending money to somebody out in Zimbabwe or something who's looking for my money. That's a great use case that Bitcoin and crypto assets in the blockchain can solve for. So when I look at these assets out there, the beyond part, so much of it is around what else is out there that could be created, and a lot of the beyond is around ICOs, and you're very familiar with ICOs. I mean, the ICOs are popping up, every hour. I get about 30 messages an hour from people that want to do an ICO.
Or what do you think of this one? What do you think of that one?
Yeah, and my point to them is always, do you have to do an ICO, or can you get cash another way? And if they're all about, well, no, I want to do an ICO, I want to do an ICO, it's a red flag for me. I want an ICO to be a way to raise money within a business model. And an ICO with a token, the token should have a business need in that ICO, in that business model. It shouldn't be something like, oh, we came up with this concept and we have this token that's going to fund it. Well, is the token part of the business? Well, no. That's how we're going to raise. And so that's where I think we're running into some problems. But so where we have a good use case that can use the token, and there's a reason why you're raising money in the token for the business, that's going to work. But I also think what's going to end up happening is we're going to start to see fewer ICOs, believe it or not, fewer ICOs and more equity-based investments and with airdrops. So the tokens will come out to the market, not so much by buying them as an investment, but they'll be airdropped to the people who bought the equity in the company. So it's going back to that traditional model. So it's an interesting thing to see how that whole area, the ICO area and the funding area, is going to grow over the next year or two, because we're starting to see more institutional people, more hedge funds come in, and they're now buying these ICOs. I mean, think of it for yourself. If you go out and take a look at an ICO, it's not that easy to buy an ICO anymore. You've got to get on a white list. You've got to, if you wanted to spend 10 Ethereum the day before, they say, oh, we're only going to take 2 Ethereum.
Mm-hmm.
Well, that's because a lot of people or a lot of money has come in from institutional investors and hedge fund investors. So they're squeezing the little guy out with a lot of these things, and I think that's going to continue.
So we're talking about making a lot of money, airdrops, ICOs. This leads to the inevitable conversation of the tax man. What do you think tax wise will be done. Because as far as I know right now, if I go to H&R Block for my income tax this year and I go, here's my Coinbase account, check it out, bro, they're gonna look at me like I don't know what to do with this. So where do you see taxes and that coming into play for people who hold crypto long term, and versus people who short it and cash out quickly?
Well, the reality is in the United States there is a form that if you have any crypto gains, you have to file a form. And if you're someone like you and I, who the IRS knows that we're doing this stuff, we don't file that form. Maybe they're going to know we should have. So the bottom line, tax should view crypto as a stock. And just as you buy a stock at a certain price, when you sell that stock, did you have a capital gain or a capital loss on that stock? Now, I don't think the long term and the short term come into play. I think the IRS is still trying to figure that out. But in essence, their ruling is that it is similar to property. So it's similar to a stock. So that means that you've got to keep good records of this. And you mentioned Coinbase. Well, Coinbase actually does a pretty good job of keeping track of all your buys and sells and everything else. And if you just print out your Coinbase at the end of the year and take a look at it, you should be able to figure out your gains and losses. Problem is, guys like you and I might also invest in Bittrex or in
Exactly.
Cryptopia or these other ones where their record keeping is not that good.
It's so hard to keep track.
I know. Well, it is. It is. Well, there's a market there. That's a use case. Somebody should come up with something. But I think the bottom line is you really need to keep track of it. I think we're probably going to have the luxury for a couple of years to just do a best efforts at keeping track of it. But at some point in time, the government's going to basically say it's just as if you bought a stock or a bond. What did you buy it at? What did you sell it at? Yeah. Which, of course, then becomes a problem for people who use it as a currency.
Yes, exactly.
So people who are using it to, as a dollar. No one says, well, I used this dollar today, and I mean, there's an FX exchange, and you can tell what the price of a dollar was versus the dollar tomorrow. So that whole part of it is still evolving. So is that short term versus long term? I don't know. I think they still are trying to figure that out. But the bottom line is you've got to keep records. You've got to keep track of this. And I do think there's probably a good use case in there somewhere for somebody to come up with something to make this easier for all of us who are out there trading and investing and playing in these markets.
I think the rule is first in, first out. But with that whole thing in place, like, my question is, how do you know I sent the Bitcoin from Coinbase to myself? How do you know that wasn't something I just sent as a donation to somebody for their YouTube channel? I have a couple arguments for the whole tax situation, because I feel like inevitably the way that we see taxes is going to have to be reevaluated. It's not gonna, like, you look 20 years from now, people look back, they're gonna be like, oh, that's how you did taxes? Like that, or taxes, what the heck's taxes? With the way blockchain technology works, I think it's going to be cost effective for them to go with it, not against it. I like to mention this, I think maybe they're going to become government mining. And every time we do a transaction, that transaction fee and the mining reward is basically like taxes, or whatever. I don't know. That's my thought on it. But where do you think we're going to see regulations start to come in the U.S.? Because Bitfinex, I believe Bitfinex Exchange just exited the country politely, screwing everybody that was a U.S. exchanger on their platform. Me personally, I'm worried about things like Poloniex, Bittrex, Kraken, eventually leaving due to regulation. Where do you see regulation coming in, first? Like, what do you think will happen? Where do you think it's going to be coming into play in the U.S.? Because it doesn't matter anywhere else.
Well, we really need to get some more clarity from the government here and from regulators. We really do, because what's ending up happening, like you're saying with Bitfinex, we're already seeing ICOs and pretty decent ICOs coming along. And you take a look at it, you read through it, you read through the white paper, and all of a sudden it says, you can't do this if you're a U.S. citizen.
Mm-hmm.
And all of a sudden now U.S. citizens are missing out on that. Now, a lot of that may be because that is not passing the Howey test, and it is a security versus something else, and they don't want to go the route of accredited investors. We actually have some regulation already in place, or at least a model with the Howey test, which basically allows us to say if something is a security, then it has to follow certain rules. And what we're starting to see is if it is a security and wants to get traded in the United States, it can only go to an accredited investor. And that's going to shortchange a lot of people who want to do these types of things.
Yeah, that's why I got into this.
Right. And that's what we're talking. We're talking about something that can, benefit everybody. And all of a sudden now we're getting to something that looks very much like the capital market system, where if you wanted an IPO in the past, you had to have a big account with your broker, and you had to have a lot of money. Well, now you wanted to get into a good hot ICO, you got to have money. You got to be an accredited investor. That's not what this was created for. But to come back to regulation, that's where I think the regulators have to take a look at this and start to say, how can this be done properly to protect the investor, but to also harness what this technology is trying to do, which is to provide a democratic way, a real strong way for everyone to benefit from this and everyone to play into this. I mean, we have crowdfunding rules that have been put in place with the Jobs Act. There are some ways for more people to get involved. But I think the government has to provide some clarity. And I think you're going to start to see that. I think you'll start to see the SEC start stepping up. I think they will come down with a hammer on some of these ICOs. And as long as they do it with some clarity, I think that's a good sign, because we've got to do something with these ICOs. There's just too many of these ICOs out there. People either just have to pay attention to what's good or bad, but they also need to be protected. So I think you're going to start to see the SEC come in on that. Once they do that, I'm hoping that they embrace the community and they involve the community and come up with some regulations and policies that don't disrupt what we're trying to do here, but just protect and enhance what we're trying to do in terms of bringing companies out there and creating some real innovations with this technology.
Yeah, with the way digital currencies and digital assets work, I think the SEC trying to, hinder the on-ramping into ICOs will actually cause a dark market to pop up. Hey, here's a job opportunity. You invest in this ICO for me because you're accredited. And that way you can just send it out of your wallet, send it to my wallet, call it a day. Or say you lost your wallet private keys. Who knows? Someone hacked you. Whatever the case is, you lost your money. But you can do this for me. And that could potentially cause another dark market. And I hope that doesn't happen. I got into this because of the permissionless investments. I wanted to invest in things, and I didn't know how, things like, I think it was Bank to the Future or something, Kim.com was trying to do a thing, and I was like, I want to invest in Mega Coin or Mega Upload or whatever. I want to do this. And it's like, you have to have $1 million or be part of a club that's worth like 5 million. I'm like, well, I don't know anybody in a cool club like that, so what the hell can I do? And then I found Bitcoin, Ethereum, and stuff, so I hope that doesn't happen, but eventually I think it will, it's sad.
Yeah, I totally agree with you. I mean, I think, an accredited investor, the reason they do that is because they want to bring people in who, if they lose money, it's not going to kill them. So that's why they do it. But they're also protecting people who are saying, hey, my barber said I got to invest in ICOs, so I'm going to put Johnny's tuition money into ICOs. He said it's going to triple or quadruple, and all of a sudden they do that and they lose everything because they were schmuck.
Yeah.
I mean, you got, so there has to be somewhat of a balance there. But your point about it going to the dark market, I hope. I mean, this technology grew out of a lot of things on the dark side of things, Silk Road and all of that stuff. But the blockchain, Bitcoin, crypto assets, they're a thing that can shed light on so many things throughout the world. And I just hope that we do this right and that we get some assistance from, like you said, governments and regulations and supervisory organizations out there so that it doesn't have to go back into the shadows, so that it can really reach its full potential. And hopefully it's a way that everyone can get involved and everyone can benefit from this.
Yeah, if they try to tell me I can't invest in certain things, and I think it's worthwhile, I'm probably going to take a legal risk because the American dream is to get out of
Now don't
America.
say that. Now don't say that. Be careful what you're saying there, Ken.
This
You
is
know
all
you
under
know I'm
comedy and
president of the Ken
entertainment.
Bosak fan club. I gotta keep an eye on you, buddy.
Yeah, take all this with some character, guys. But honestly, I just feel like this is what they're going to create. They're going to motivate people to do things, and that's what the government loves. They love to dangle something in front of you, but if you cross the line that gets you to it, you're going to get slapped on the hand for it or worse. I don't think that's right. I think the whole concept of the SEC protecting people from investing money they don't have to lose is the equivalent of like a bouncer checking your blood glucose level on your way into McDonald's. If you pass, you get in. If you don't, go home, be healthy, eat an apple. It's not. It's your life. It's your money. Do what you want, and that's how I feel. I did.
I agree with you as well. I agree with you as well. But we don't want to have a place where people make. We have to have some sort of guidelines for people to at least be able to make intelligent decisions around money and investing, and that's really what we have right now. And I'm not in favor of the government telling us to do that. I think a lot of that is a responsibility of the community,
exactly,
and these ICOs that are coming out. The ICOs that are coming out. I mean, the first thing you should do when you see an ICO coming out is you read the white paper. If you don't read the white paper, or you don't understand it, or you can't explain it to anyone, then don't invest in it. Don't, if you're not going to do that, then don't get involved in this. So, I mean, there's personal responsibility that's involved, and if people did that, then maybe we wouldn't have to have the government step in. I don't want to see the government come in with a sledgehammer. I'd rather see them do it surgically, but I also think there's a responsibility for people to do the right thing. And that's what we tried to do with the book. In the book, we create some valuation models and some real rules in there. Don't do this, do this. If you can't explain this to someone, then don't invest in it. If you're investing in something just because it's going up, don't do that. Understand what you're putting your money into, like anything else. And that's what we're really trying to say around this. And that's what people should view with these ICOs. People just, I got to get some Ethereum. I got to get some Litecoin. Do you even know what it is? If you don't know what it is, it's your money. You worked hard for that money.
Yeah.
Understand what it is. Spend time with it. And I think this is, and I'm encouraged by the fact that we've got millennials, we've got people who are investing in crypto assets, who are viewing this and analyzing this the same way that old guys like me used to look at stocks and evaluate it. And it's the new investment model. And I think you're going to start to see this grow, and people are going to start to take a look at this, how to evaluate it, how to value it, how to model it, how to analyze it. And it will become something that will make it easy for everyone to understand what they're getting into, what the benefits, what the consequences are of it. But there are personal responsibilities. I don't want the government stepping in and doing, like I said, doing a sledgehammer here. I'm with you on that. But be careful what you're going to do there. Don't do anything crazy there, Ken, all right? I got to look out for you, buddy.
I'll buy a private flight in Bitcoin out of the country. The pilot will accept Bitcoin, so there was no transaction of US dollar. See, that's all my argument. Like, what are you going to tax me if I buy a house from somebody who just wanted some Bitcoin? It's like, it's so weird. It's like, you know what I mean? It's like, prove I sent this. It's so much. I just think I know that eventually regulation and everything will happen. I just don't think that the system that's designed today will survive it. Just like how the entertainment industry is literally re-evolving around the internet. I think the tax, the whole the way it's designed, that system is going to have to crumble and then reflower. So, like, what we're used to now is not going to be anything to what we see in the next, like, 10 years, maybe 20 years from now, when the dust settles from, like, this whole fiat crypto war. And, Like you said, I think we're not. Maybe we won't see government regulation. Maybe we'll see community decentralized regulations. Like
Right.
decentralized exchanges, atomic swaps are going to be coming into play soon. So like a lot of these things we're talking about, like I know like I'm saying some things that are pretty heavy today, but I honestly do believe in the future, it's going to be like somebody joking, years ago about marrying their boyfriend if they were also a guy. Like one day we're going to get married. I love you. As a joke, but now you can because laws
Right.
change, and now that seems so archaic to think you couldn't do that. And then when it comes to the way we use money, the way where it's going to head when we get there, we're going to look back and be like, that was just so archaic. And I just wanted to ask one or two more questions, since you're an investor of sorts. What was one of your least profitable investments, and how did that happen, and how did you recover? And maybe tell us a little bit about one of your most profitable investments, and what you could have done differently from the two. Like, how did one become a bad investment? How did one stick out to be a good investment? Like, how did that process play out? How could you have done one differently? You have anything that you could think of?
Now, well, and I guess we'll just keep this to crypto, because my good and bad investments run the spectrum. I was around during the .com bust, and I was around during Black Monday and the financial crisis of 2008. So I've made and lost a lot of money over the years. But in terms of crypto. Some of the worst investments I've made were investments when the ICO market, and I'm not even going back that far, I would say 6-7 months ago, when the ICO market was heating up, and I would get an email on an ICO, and I would say, all right, I'm going to throw one Ethereum over there. And somebody else would come along, and I'd say, I'm going to throw a Bitcoin over there. Because there was a point where you start playing around with these assets, almost like they're monopoly money.
Yes.
Yeah. Oh yeah, I'll put a half a Bitcoin over there. I'll put Ethereum over there, and all of a sudden I'm putting money into these things like Superior Coin, which, as anybody's ever done,
I don't know what that is.
I have no idea what. Well, no one knows what it is, and if you look it up, I mean, the one guy's fighting with the other guy. One guy thought the other guy ripped them off. Anyway, and the bottom line is, at the time, I was like, well, it was only half a Bitcoin, so I didn't think much of it. Well, half a Bitcoin right now is $2,500, right? So it forced me to kind of say, this is not monopoly money. This is, and when I started to invest in a lot of ICOs, and I saw some of them go up and some of them do nothing, I went back and I said, what did I invest in here? And when I went and looked at, what I put into, which I basically threw, maybe I'll throw an Ether over there. And at the time, Ether was, I don't know, $10 or something. Well, all of a sudden, Ether's $300. So you throw a few of them over there, and you start to look at what you invested in these, and you've taken a major hit. And these ICOs, you should have known better. I should have read the white paper, and I should have known better. But I will say one of the best investments I've made, and I want to thank my good friend Ryan Strauss, if he's anywhere around.
Shout out to Ryan.
My good friend Ryan alerted me to this, and it was actually something where you did have to have, I think, a certain level of being an accredited investor to get into it. But it was something where, rather than it being an ICO, it was buying equity into this company, and then bought equity in. They had a low valuation. It was before the ICOs, where they were like, we're out there raising $60-80 million. This was raising less than $1 million. Bought into equity. They did an airdrop of some of the tokens, and the idea took off, and it's done very well. But that was right before we started to see this boom, where ICOs are raising $60-80-100 million. So I think what I've learned is, you've got to take a look at what you're putting into them, and you've got to take a look at what they are. Read the white paper, take a look at the team, do your due diligence on all of these things. And don't just throw the Bitcoin or the Ethereum over there, because, they could be worth a lot of money down the road, and it may have been better off to just have kept the Bitcoin and not invested in these companies.
That math drives me crazy sometimes when I'm like, when I bought this, when Bitcoin was this, but this went up 10%, Bitcoin went up 80%. Shit, I lost 70%. It's so hard to keep track. So I'll just buy a little bit, hold it. When I get new money, I'll buy something new and hold it. I don't like to trade one asset to buy another asset. I'll wait till I've earned new money. I'll earn new Bitcoin. I'll go to my job, get USD, buy Bitcoin, buy the other thing that I wanted. But yeah, I'm done with trading. Personally, I don't use exchanges anymore. I don't know if you use any exchange or anything, but I stopped using them altogether. I don't trust anything that doesn't let me hold my private key, period.
Right. Well, I mean, I think that's true. One thing I did want to point out, because I know you and I have talked about, this from an investing standpoint, and you mentioned Coinbase before. One thing I do like about Coinbase is, and when you talk about exchanges, Coinbase has the ability for you to own Bitcoin or Ethereum and Litecoin, and then also put them into a vault. Have you ever used the vault service
I
on
haven't used it.
Coinbase?
I have a hardware wallet, so I've never had to use the Vault service.
Okay, great, and that's fine as well. And what I tell people a lot of times is, and I use hardware wallets too. I've got my, got my little, ledger here. And in fact, this can be very good. You can put some, that could be your retirement account.
It is, yeah.
That could be
well,
your
this is in
retirement
case of
account.
emergency account. Anywhere in the world, this is money.
There it is. Get that offline. But with Coinbase, I tell people, you have a Coinbase account, that could be kind of your checking account, and then the vault could be kind of your savings account. So if you feel comfortable with the vault setup on Coinbase, that's okay. But if you don't, and you want to take it off the network and put it onto a hardware device, that's great. And potentially view this as a savings account.
Mm-hmm.
And then you have some other money that you leave in there, that you either spend, or you either say, you know what, that's where if I see an ICO that comes along, I'm going to invest in it. But putting some money away into a savings account to hold on to, and for the future, or like I say, even for retirement. So I like that whole concept of doing the checking the savings account, like with Coinbase, with the regular account and the vault.
They don't let you back up your private keys anymore. So if your money's in Coinbase and they are, their website or domain for some reason is being attacked by a DOS attack, you won't be able to use your private key to recover your funds off of Coinbase to invest in that thing if so were to happen at the same time. Occasionally crazy things happen, like Ethereum starts to go up 30%. You can't withdraw Ethereum from Coinbase now. It's just, I'm sorry, we can't do this. Something froze, and you know what they're doing. We all know what they're doing when that happens. They're trying to make sure that their honeypot, their overall is keeping up. So I just wanted to let people aware, if you're using Coinbase, just know that it's like the bank. They have your money. It's their money. If Coinbase has your Bitcoin, it's their Bitcoin. You're just asking for permission to access it every time you do so.
That's a good point. I mean, I still don't have my Bitcoin Cash.
Yeah, you'll get it before the end of the year, though.
Coinbase said, we'll get it to you in January.
Eventually.
But we're holding on to it. Yeah, we're holding. I mean, I don't like that. I don't like that at all.
Dude, it went to $1,000. By the time you get it, what if it's $100? You missed out, man. That's not fair. That's robbery, in my opinion.
Well, I think it is. I think it is too. But I also think you make a very good point. If you're investing in Bitcoin, you and any of these crypto assets, you have to know how to use these hardware wallets. You have to know how to store your assets offline. Okay, so you've got to get familiar with Ledger, Trezor, and understand how these work, and view them in a manner where maybe you view them as a savings or whatever, but you need to know how these things work. I mean, you make all good points about this. I mentioned Coinbase because so many people use Coinbase. It's easy to use, but like you say, they still feel like, TD Bank down the street. Yeah, maybe we'll give you your money if you come in and, hey, here's a lollipop and a pen. Go away.
I like Andreas's. Andreas Antonopoulos always goes to these weird analogies, and I like his where it's like it's hooking up a couple of horses to a Ferrari instead of the engine. Coinbase is great, but I mean it's kind of still holding us back from what we actually have the full potential to do and the full potential to be. I like the whole idea of personal responsibility. I was recently hacked, and because of my lack of personal responsibility, I was taken out, Darwin style. People got to learn from my mistakes. But I'm still a fan of this whole thing where we don't have to depend on Coinbase or TD down the street. You know, me and you and Salt and a paper wallet, you know, these things like this, the decentralized exchanges, you know, the future looks great. I want to end on one question here so we can wrap things up. I know people have things to do. You're a busy man. What is something you want the audience to take away from our conversation? Just one thing you really want to make sure that after listening to this is what they got out of it, and then I can let you go.
Do your due diligence. Do your due diligence. And what that means is not just looking at these assets properly. I've talked about reading the white papers. I talked about knowing who's on the team, keeping track of these. View these assets the same way that you would view a stock and read about a stock. There are so many assets, there are so many resources out there for you to understand and read and follow this. I mean, when you got sites like Crypto Compare out there that give you charts, that give you so much information on these assets, use them, understand every asset that you have. You should know it. You should know what they do. And in doing your due diligence, it's going to make you a smarter investor for the ICOs. And then the other thing I think is just start to think about investment philosophies, asset allocation, all of those types of things that may sound very boring, but they've been financial tools, financial analysis resources that have been out there for years, and they can be applied to the crypto asset world and to anyone who's investing, whether for short term, whether for college, whether for retirement, whatever. You've got to have a financial plan, an investment portfolio. And even if it's in crypto, think about why you're allocating certain portions of your asset to this crypto versus that crypto and trying to get diversification. So I would say those are the two things I'd like people to get. They may sound old and stodgy and everything else, but you know, there are things to be responsible. You're putting your hard-earned money into these assets. Make sure you know what you're putting your money into.
I got to steal one more question from you because I got a good one in the comment section here. How do you feel about putting some Bitcoin or GBTC, I guess, in a solo 401k and then borrowing against it?
Oof. Don't. First of all,
that face said it all. Said it all.
Well, I don't. You know, I if you want to borrow, I think borrowing against GBTC is not a bad idea. But don't borrow against your 401k. You know, I mean, if you have to, you know, your 401k, your retirement accounts, put the money there and forget about it. Because when you're an old guy like me, you're going to be glad that you got the money there. Okay, don't start to say, oh, I'm putting money into my 401k and if I need to use it, I'm going to use it. No, you're putting it away for your retirement down there. So it's less about the GBTC concept and more about I don't like people borrowing against their 401k. There's better things to do out there. If you want to put it in a regular account, and I don't know if it's marginable, but if it's marginable and you want to do those types of things, yeah, do that in a regular account. But playing around with your 401k, I'm more of a traditionalist when it comes to retirement accounts. You're putting away for retirement, leave it there.
Awesome. All right, Jack. Thank you so much for your time. All right, guys. Jack Tatar, bitcoinandbeyond.com, at Jack Tatar on Twitter, author of the first Bitcoin book published, What's the Deal with Bitcoins, and currently the author of one of the newest books published, Crypto Assets, the innovative. That's
investors.
Thank you.
I know it's a tongue twister. Also, by the way, if you go to Bitcoin and Beyond, you can pick up a free ebook of What's the Deal with Bitcoins. So just go to bitcoinandbeyond.com. There it is. Look, I love this guy. But
I got to get it autographed, man.
You got, and why I got to get you one of these autographed.
Yes.
But you can get a free ebook on Bitcoin and Beyond. And so this is Crypto Assets, the Innovative Investor's Guide to Bitcoin and Beyond. And look, it's kind of a beefy book too. There's a lot in here. And you know, if you don't use it for anything else, you get flies and stuff with it. But it's
I love it.
Thank you, Ken.
Thank you so much, Jack. All right, guys, thank you all for joining live. Don't forget there's links in the description box below. Go ahead and check them out. All right, guys, everybody, don't forget retirement matters. Prepare for it today and have a day.